do this. Okay, so exercise 424 on page 454. This is closing entries, closing the books at the end of the year, closing the temporary accounts, right? So I think the first thing that I would make sure that I have listed for myself is the order in which you close the accounts. So number one is the revenues that you close out, right? Number two are the expenses that you close out, right? Number three is the difference between the revenue and the expenses, which is the retained earnings. That's the entry. And then number four is the dividends. Okay, dividends. All right, so let's do it in order. So this exercise says, the adjusted trial balance for Bryan Company is given in exercise 422. So that's two exercises above, okay? And then it says, prepare the closing entries for the temporary accounts at August 31. So where are the temporary accounts? We already put it. The revenues, the expenses, and the dividends, all right? And the order we do it are revenues, expenses, the differences between revenues, expenses, and then the dividends, okay? All right, so we are going to go through that list and we're going to start with the revenues. So we look at the account there and we know that in order to get rid of a revenue, we have to, oh, I already had the order there. Look at that. In order to get rid of the revenues, we have to do the opposite of their normal balance, and their normal balance is a credit balance. So we are going to debit it, right? So they're telling us that the year end is August 31. So we're going to put August 31. And they have two revenues listed there. So we are going to debit service revenue. And we're debiting service revenue for $34,600, and that's going to clear out that account. And then we have rent revenue. And that account is $13,100. And then we are going to add those two together and we're going to credit income summary. So $34,600 plus $13,100 is $47,700. Okay. So we are going to credit income summary $47,400. Now on my scratch paper, you'll see over to the right here, I would just put that credit of $47,700 as a credit on my income summary T account. Okay. All right. Now we're going to go through the expenses. August 31. Now, an expense has a debit balance, so to get rid of it, we are going to credit it. So that means we are going to debit income summary. So we're going to be debiting income summary. And this is the one time, as I said, that I will tell you, do not put a number in that box yet. You need to list your expenses first and add them up to make sure you get all your expenses. So we are going to go through the list of expenses and list them here. So we have salaries and wage expense. And we're going to credit that $18,100 to get rid of that. We have rent expense, and that's $10,800. And the order that you put the expenses within the expenses doesn't matter as long as you have the expenses after the revenue entries. Okay, I would just put them in the order they show in the adjusted trial balance that they're showing you. Okay, then we have the supplies expense, and that is $2,000. And I forgot to mention too, whenever you see these trial balances that show before adjustment and after adjustment, you are always working with the after adjustment number for your closing entries. Because remember, you do your journal entries, you post the T accounts, you do your trial balance, you do your adjusting entries, you do your adjusted trial balance, you do your financial statements, and then the very last thing you do is closing the books at the end of the year, which are these entries. So that means that you would be working from the adjusted trial balance numbers. Okay, the next one we have is insurance expense. And insurance expense is $1,500. And then we have depreciation expense, and that is $1,200. And that's the total of all expenses. So we're going to add all of those up. 18,100 plus 10,800 plus 2,000 plus 1,500 plus 1,200. Okay. And if we add all of those up together, that's going to give us a total of $33,600. So that's how much we are going to be debiting income summary, $33,600. So our next entry is number 3, where we need to know the difference between the revenues and expenses. So there's 2 ways you can do it. One, you can run a T account like I'm doing on scratch paper over here, right? So I'm going to go over here and I'm going to do a debit of $33,600, and then I'm going to balance that account. And so it's going to be $47,700 minus $36,600, and that's going to be a total of $14,100, right? So now I see the income summary has a credit of $14,100, and I know that income summary starts at 0 and ends at 0. So that means in order to clear out that income summary, I need to debit it, $14,100. The other way to think about it is that, well, retained earnings has a credit balance, and what I'm retaining is the difference between what comes in revenue and what goes out expenses. So I would be crediting revenue for that amount, which means I'd be debiting income summary. That's another way to think about it. And the way you would do that is you would look up above and you would go, well, revenue was a total of $34,600 and $13,100. That's $47,700. And expenses was a total of $33,600. So I would subtract that. And again, I would get the $14,100. I think that doing the T account on the scratch paper is better, because when you see that credit of $14,100 come up, that tells you, you know, you have to debit it to get it out of there. So the next entry then, August 31, you're going to debit income summary. Misspelled that. Income summary. You're debiting income summary, $14,100, and then you're crediting retained earnings, because at the end of the year, this is what you retained after everything was said and done, $14,100. Okay. And so if we come over here to the income summary account again, and we see that we just debited income summary $14,100, right? We come over to the T account on our scratch paper, we debit $14,100, we see that our balance is 0. We start at 0, we end at 0, so now we know we did all the entries correctly. Last entry we do is dividends. August 31, they told us dividends was $2,800, and for the dividends entry, you are debiting retained earnings to make that go down, $2,800. And then you are crediting dividends, $2,800. And we do this one separately from expenses, because dividends are not an expense of running the business. They're something that a company selects to pay to their stockholders, and they're not an operating expense of the business. So they run directly through retained earnings. Okay, so those are the answers for exercise 424 on page 454.